grew up there, and then we took a taxi, and the taxi drivers were amazing. He had land and he was showing us land and stuff like that. So that was good. He had good energy, but Puebla doesn't. So going to check out around Puerto Vallarta now in January and see what comes out of that.
Nice.
Yeah. And here, it's the same. It's like,
yeah, same thing. You didn't come back to a revolutionary world, eh?
no, nothing changed. So I'm like, whatever, no big deal.
Yeah.
I'm just gonna work my hours, get my money, and move on.
Yep.
Yeah. And in the meantime, what did you guys decide about the market?
For what? What about what was the big
market or
decision?
not having the market on the 18th?
Oh, that we came to that consensus back on Wednesday last week. Market is canceled this week.
Okay.
Yep. And we're going to Regina.
Oh, nice.
Yeah. That's going to be great. There's an event out there, a bunch of speakers that I actually like, and Wayne Peters is going to be there, and he's got a market table for the Authentic Media Association. So okay. I'll be manning that table. Okay. And yeah, that's that.
How is that going to help, I guess, our...
You can buy ad space on their platforms. Yeah. So this is going to be in the end, right? There's going to be the first phase of this is just get these media creators, these authentic producers of content, get them an audience and show them how to do it. Once they have the audience, then what they can do is that they can start they can start buying ads on the different media platforms that are going to be all over the place. So these content creators can now go to their local businesses and say, "Hey, I got 5,000 people that tune in onto my TikTok account in our community every single day. Why? Because I post the videos of things that I'm teaching them how to do." And that attention time that the creator gets now can be monetizable for his community and getting them more business. So that's what the basis of the AMA is. Let's get back to the roots. We need to localism is the only safe and effective cure for globalism.
Mm-hmm.
And so we're going to do it at the media level, the free speech level. And that's what he's launching this weekend. So, yeah.
And what platforms are these?
It's going to be the independents. Like, for instance, What's Up Canada.
Right.
He's been doing it on his own without any help, bootstrapping it. He's got no more technical ability than any of the other people that I work with, like in the Dragon Riders. He's, well into his 60s. He doesn't like tech. He hates the fact that he has to be in front of his computer to get the message out, but he recognizes that he needs to have sovereignty over his data because he's getting sniped by the mainstream left, right, and center. And so we're going to show journalists how to safeguard their work. And all I'm going to be doing is the tutorial videos.
Mm-hmm. Nice.
Because I'll let them sort out the free speech problems. I think we've got bigger problems to face right now.
Which are?
Why the markets crashed on Friday. On Friday.
Mm-hmm.
Bring up my chalkboard.
Yeah, everything went so... So what's going on with that?
That's what we're going to cover today. We're going to first off, we're going to do the, we're just going to do some technical review. So I'm not going to bring up charts yet.
Okay.
So this technical review is just going to be, you're going to have heard this lots of times.
And that's fine. I need to hear it again.
How do you do? And we're going to go through it quickly because you're familiar with the language. So it's just a review so that we can then look at what happened. Definition of a trend. Bring forward your ideas. Well, how do you identify a trend?
Well, it's the data going in one specific direction or another on a consistent basis.
You got two types of trends. There's the bull trend,
right?
And then there's the bear trend, right?
Okay.
Bulls go up, and my I apologize, my thing has got a delay to it today. It's weird. I wonder if I might have to. Yeah, I have to reset that app. Sorry, folks. I have to reset it. I'll save it and I'll just bring it right back, but I got to close and then reopen the app. I fixed it last time. I don't even know how to reset, flip, and rotate. Oh my gosh, it's a good thing there's a button for that, because what the heck? Whatever. I can do that. I can just zoom in. All my settings are all messed up. What is going on? Is there a freaking mercury in the microwave again?
I don't think it's until next month.
Gee.
It's good.
Okay.
11/11.
It's still giving me all these delays. Fuck. Okay. Trends go up. Trends go down. If it's going sideways, it's not a trend, right? So when we look at, you know what, actually, I'll have to use the chart. I didn't want to because I wanted it to be a blind, like a blind analysis. So I'm just going to have to use it. We have a trend here. I'm going to, right. Okay, so here, this was at the end of November. Is that showing up?
Nope.
Oh my Lord, what a disaster I am this morning. Brave. Fade. Away we go. Okay, so here at the end of November, we had this big rise. Everybody got excited. I got excited. We were up. Everybody was up. And then what occurred was that we started to see a trend coming down. We define the trend by the lower highs. This is the technical. What you said was absolutely correct. There's up trends and down trends. We identify a trend by when we see lower lows and lower highs, or the other way around. Sometimes it's higher highs and higher lows. That's the bull. So when we have nothing, it's just called sideways or consolidation. So now I'm going to zoom out. What we've been doing, even though there's been tons of things going on where we recognize that this is where the institutions are buying and they're selling at highs, right? So when people were saying, this here's the trend, they were going to say that now we broke that trend because the price went above that trend and it started following this new line. And I drew this line earlier this year. This is from June. So this trend from June broke out of the trend from December. And what happened was that in trading, what you do is that you go to where your market structure is. The market structure has been the lows staying still. There's no trend. So this is not a trend. This is half a trend. because we're not forming lower lows. Those lower lows did not, those lows did not go lower. In fact, they went to the same damn spot, and every time
Ah.
they bounced slower. Because here, this all happened, that bar right there, that all happened in one day. One day the price, boing. When it did it again, when it touched that line again, it didn't go nearly as much of a boing. It was just a bouncing ball. The next time it went up, people were like, yay, new highs. It's like, wait, hold up. Hold up. We still have a high that's up here, right? We still have a high up here. So this high is the market structure. Remember, lower lows, lower highs. This high is way higher over there. So no, when it came up from this bounce here, people were all excited when it got to this part right there. Sometimes I gotta, there we go. Now I can see myself better. So this point here is when people got excited. And I was like, hold up, we still have a trend back there that is to be paying attention to, because this is just consolidation. We don't have a switch. We don't have a confirmation. This here, neither, like we need to get that high higher before we have a confirmation. And this was what I was talking about all year long. When it bounced out at this point, what occurred was that there was that faith. Okay, great. Now we've actually been breaking out of that trend, right? Because yes, Paul, you're right. There's the trend. We broke out. This, again, this is technical analysis, and then we're going to get to the news. So this bounce here, it was simply retesting those old levels that we were kind of hovering between in the middle of this last little mini market structure. There's a high here and a low there. Mm-hmm. So this little bit here, coming back out of it, we broke above that previous high. So that's where people were like, yay, now we just need to retest the line. And sure enough, we retested that long-term line and we formed a new trend, because now we have higher highs and higher lows. And there's three of them: low, low, low. Low, high, low, high, low, and we're waiting for low, high. Hasn't happened yet, because there's no trend unless we have an A. So we have a trend now because we have A, point B, point C, and point D. That's another part of the review that I wanted to cover on the chalkboard, was to draw out A, B, C, D. Once we have that, that's a confirmation of a trend. Because now we've got markers, we've got an algorithm now of data, or sorry, we have enough data to build an algorithm. Because of these distances here, we can mathematically do like how much of a retracement was it, how far did it extend. Now we've got enough parameters to start a trade plan, okay? So trade plan gets started. What does everybody do? And I'm going through this. This is how you're taught to trade, okay? I talk about these things, but what I'm about to show you is how everybody trades. And it's good. It's how you do it. This is how you do it. This is not a bad strategy. Everybody trades this way who has success, okay? If you lose money in this kind of a thing, it's, you know, and you follow this trade strategy, 94% of the time you will be fine. You're not going to lose all your money. And because this is the strategy, knowing that this point here is the major, that's the major market structure. What people do is that they will take, I'm going to draw lines now so they're differentiating. They will take the distance of this movement, because that's the big velocity movement that we need to gather data. Then we calculate the next thing is we calculate how high did it rebound. And we take a ratio of the two big movements, so from the high to the low, and then this ratio here, we calculate how much further below the low we need to set all of our stop losses so that if it goes down here, we're cutting the rope, so to speak. Where we recognize we're not winning this trade and we close the position, bye money. That's the point that you do. That's how you do the math when you're calculating a trend. Okay. The next time it bounced and came back up again, knowing that it didn't form another low, you know that you don't have a trend yet. So you don't move that stop loss. Where is that line? There it is. There's your stop loss. What color should I make it? So that it's recognizable for you guys. Because I'm going to be drawing a few lines here.
Fluorescent green.
Fluorescent green. Okay, cool. How's that?
Love it.
Yeah, okay. That is the hard line. We're not going below that. And so what this is that you take the low here. So the low that's here, that's at 51 cents. This is ADA, 51 cents. Oof. And we were just a few days before that. We were at $1.60, $1.17, just a few days before. So $1.16 all the way down to there. You do the math, that's a pretty big drop, right? That drop, in fact, is 54%. So reality sets in for a lot of people when that happens, because this was the last market structure for a low. So this is the impulse. So it makes sense there's going to be a retracement, but that one there, that's pretty deep. That's a deep retracement. So the next movement that bounced back up again, how much did it go up? Well, it dropped. It dropped what we call pips. That number right there, it dropped 462,000 some pips, almost 463,000 pips. Keep that in mind. That had a retracement where the market bounced like that basketball. Remember, we're building an algorithm. So that basketball bounced back up 289,000 pips, almost 290,000 pips. So then you do the math, that brings us to here. When it comes back down again, you don't move that line. You don't change your strategy because now we're going up. You don't do it when it's here either, when it goes up above that trend. You maintain this. That's your job. Now, what happened? Everybody did, and I say everybody, I'm going to say 90% of the market, okay? And when I'm saying the markets, I mean the people who are playing this, okay? People like you and me that are doing these kinds of trades, there are people that do it all the time, 8 hours a day, and they're just doing this. So 90% of all of those people who are, they've got their headphones on, they're streaming themselves on Twitch all the time, and they're just sharing with everybody how they're making money. What happened was that they saw the A, B, C, D. Again, this is the vast majority of retail traders saw the A, B, C, D. What did they do? They said, you know what sorry. Yes, when they saw the A, B, C, D, what they did was that they moved up this line. The smart ones kept this line. The crazy ones, the ones that were saying, yay, A, B, C, D, we've got a trend, they made their line right here.
Ooh.
Because they were like, yay, we have a trend, A, B, C, D. Style. I'm going to make this one red because it's for death. Last week, I made this mark. I said, this is a lower low. Folks, A, B, C, this is a high. C is a lower high. And D is a lower low. This is a trend. Audrey Lynn, when did I talk to you? Somewhere in here. We were down here. I was like, you might want to sell. And it went up and I felt bad. I was like, shit, I could have left it in there. And if I would have left it in, let's say right here is where we sold, because it was low.
Yeah.
But I thought it was going to go lower. I said, we're going to be fine. Everything's going to be all right. It's going to go lower.
Yeah.
And you said, it's not a problem. I get it. You know, it went up and you even said, yep, I get it. We lost a little bit of money, but we didn't, did we? Because we didn't buy back in.
We
didn't buy back in. Right.
Yeah, exactly.
Okay. So after people saw the ABCD, then they saw this higher low. Those motherfuckers moved the fucking line again. What does that mean? Well, instead of losing everything at the red line, now they're losing everything at this line. What does that mean? It means that they increased the size of money that they put in by 140 times.
Ooh.
Because they were all excited. We got a trend. This came down and people like me were saying, we don't have a confirmation of a trend yet. Why? Because we got to zoom out again. This is zooming right out now. Instead of zoomed in with the daily candles, now these are weekly candles. Now you can see a whole different perspective of this trend. In fact, if we're going to break out of this trend going up, we have to cross that line. That's the line we're waiting for to know that we're in a trend.
You are very lively today, Paul.
Well, and I like you know what? It's because my pattern, Maureen, we've been chatting about this for the last few days. I love it when I can be proven right.
I think you called it, you nailed it. I think.
And so then the question is, what was that loss? How much? I'm going to bring up the total market cap. Total market cap. This is all of cryptos, okay? Zooming in. I'm going to zoom in quite a ways because it all happened very, very fast. So this is zooming in now. This now represents 12 hours. This price action, okay? In 12 hours, all of crypto lost 823 billion with a B dollars. This is the largest drop of crypto ever. No one has ever seen one trade make $1 trillion, almost $1 trillion. Wow. I haven't even shared with you the news. But bring up, because, okay, so we're going to get to the news. We got time. So bring up your questions. I've shared with you guys over the last year now how to do technical analysis. And I have in many ways, and again, there's that ego. I have in many ways felt frustration from people for going into so much detail about it. Now, there are some of you not that way at all, but that has occurred and it's okay. This is why I grind on that material, because the entire world of people, what did I say? What did I say? The 90%, remember that 90%? 90% of this was the middle class. These were the traders that didn't plan properly. They don't have a lot of experience, but they've got 10 grand and they're excited. Why? Because there was a trend. Look, this is market cap. This is market cap. Oh, let's go daily. Sorry. There's the big drop that happened on Friday, right there. There's a trend. A, B, C, D. And everyone was excited because C came down. It was higher than this C. That's great. Wish I could draw. Here we go. Got to do it with the mouse. There's B, right? Here's C, right? Look at D. Zoom in. How do I? Yeah, I guess I got to do it this way. I wish I could. Let me before I can do it with a 4-hour chart. There we go. Look at how there's A. Sorry. There's A down here, way back over here. B is right here. Oh, I am so out of it. B is here. There we go. I got to mark the highs so that we can see them. So B is here. C, D. C. So now they're expecting an extension, right? The extension didn't occur. This got denied. It did not create a new high. Market structure is now this low and this high. So it comes down. What happens? Let's zoom in a little bit more here. It comes down. It goes to a new low. What low is it? It's not as low as the last one. And they said, there's the trend. This is now talking about those people that are working at the computers for 8 hours a day. This is the chart they're trading now. So to them, this is a trend. It's not. Sure, it didn't go lower, but this didn't go higher than the last high. So we still are only consolidating. The consolidations, there's a rule that the institutional traders use. If someone like me gets hired by an institution to trade, there's a rule. You never trade consolidation. You never trade it. You never make a decision when it's consolidating. It's still consolidating because this low didn't, yeah, you're right. It didn't go lower than this, but that didn't go higher. Remember, it got denied. So when it went up, that's when they went crazy. And we're like, yay, the trend. This is the 4-hour chart. This did occur over a long period of time. This occurred over, this all happened. I don't know why TradingView is like that sometimes. This all happened over 58 days. Okay, so these are the people who are trading all the time. They see this and they make decisions off of this. I'm going to zoom out on the daily chart. That high right there is where they were cheering. We made the big bucks. That's great. That's another high. You made the big bucks. Guess what they didn't do? What Audrey Lynn did when she lost 9%. They didn't sell when they had the profit. Audrey Lynn did. Why? Because she was buying all the way back into this area here, but then seeing this go down so much, and then the average is just over time, it gets more and more depressing when you look at it, right? You're right. It is depressing when you look at it. But all of this ADA here that you had, all this ADA that you had, before this, when you went to sell it, that ADA was up 37%. 37%. What can we expect next? I haven't even gotten to the news. What can we expect next? Because a lot of you've got crypto now. What's going to happen? I think that we're going to see some time where it's going to bounce a little bit, where it's going to kind of find an equalization. Okay. So we had that big drop. We're still watching the end of the basketball bouncing up. Okay. We don't even have confirmation of a new high yet, because what we need to confirm that this is a high, we need 2 more pieces of information. We need 2 more data points. We need 1 more day. So at the end of tomorrow, we will know whether or not that's the basketball peak, the basketball bounce peak. If that's the basketball bounce peak, then we can expect, I'm going to zoom in a little bit because, again, that all happened so fast. Look at that. That bar is within 4 hours. It all went boing, all in 4 hours. People lost their shirts. There was one guy that I follow. I follow him because he does know how to identify good companies that have strong futures. They're well established. They're aligned well for the 4th industrial revolution. We're talking like robotics data. Think about how many robots they want to put on the streets. All of that data, where does that go? We got to privatize that, especially that. So all of that data, there are companies that he's advised you'll want to be a part of this company. I think that their coin is going to go up because of how awesome their privacy is. Well, great, awesome. But we don't know whether or not this basketball is going to bounce back down. Market structure is now here. Market structure is now way down here. If this is market structure, what does that mean we have to do? We actually have to lower our cut it loose line now, don't we? Mm-hmm. Because that's the line. We have to give ourselves room. How much? This right here. If this is, in fact, the basketball bounce top, we will need to move this line a little bit more. So if you want some short-term gains, you may consider doing what Audrey Lynn did 2 weeks ago, 3 weeks. When was that? That was mid-September-ish. Yeah, because you sold in here.
Yeah, I think it was 2 markets ago.
Yeah, okay. So mid-September.
Yeah.
Yeah, I think I mentioned it to you here.
Yeah.
Like about a week before or something like that.
Yeah, you did.
Man, that feels good. Maureen, can you bring me back into, I love it how you bring out those forks. Can you bring out that? Because I want to ground. Now we got to talk about the news, and I don't want to start the news like this.
I kind of have a question about it then.
Go ahead, yeah.
So with this drop, and you know what my investments are.
Mm-hmm.
So what I'm hearing, and maybe I'm wrong, is that I should sell some.
If you sell now, I wouldn't sell it all.
Mm-hmm.
I would not sell it all. You've got a great position. I don't want you to miss out on what, I mean, it might not bounce down very far at all.
Or should I sell me? Or just keep them? Or should I even sell or just keep them?
If you were to sell, I would say 25 to 30%. So you're going to move, take the whole amount. Let's say, you know what? Great. I wish my tech was working. Let's say, for instance, you've got 1,000, just so that we can use easy math. If you have $1,000 and you want to try this strategy out, you may want to take out, convert back into fiat, take 30% and just go put that quickly into Canadian.
I think we're going to have a conversation with this on Thursday, Paul, because I'm
All
not.
right.
I
By
don't think
Thursday.
I don't
By
think I
Thursday.
understand.
Sure. Yeah, no problem. No problem, Audrey. That's fine. On Thursday we can do that. We'll know. We'll know whether or not that's the basketball bounce yet, right? We don't know that right now. Could very well continue to go up. And you know, we don't have confirmation yet. So that's a good Thursday will be a good day for that.
Okay.
But wonder if you just
Maureen?
wait it out, like, you know, like you're ready to wait it out a year or something. Do you think
Yeah.
ADA is going to tank?
Do I think it's going to tank? Here's what I would do. Thank you very much, by the way. I'm going to go ahead and talk because I can hear through that. It's wonderful. I would, considering that we have such, like already, if this basketball bounce is the high, which it has to be at least that. It could very well go higher. If it goes higher, we'll still have to make more adjustments. But at this point, if that is it, I would extend the absolute bottom where it's like, this is where we cut the line. Oh, this is only for like if you're really, really serious. If you're not doing leverage trading, don't worry about it. But this is where I would make it where I have to now start selling because I'm worried. That's the point that we're creating here. What we do is that we use the Fibonacci tool. I don't usually use the Fibonacci tool. I don't make that to make predictions of winnings. Well, a lot of people do it that way. They use it to predict where is the market going to go so I can sell. I use it to predict where does it go where I know to cut loose if it goes down. So if it's bearish and working against me, this is the tool I use to determine how far this goes. What I do is that I go to the A. My most previous A is right there. And then I extend downwards. I can see I'm going to have to brighten this up a little bit. I'm gonna go to the main one. I think that will make it brighter. There we go. Now we got more lines to see. I'm going to zoom into the 4 hour because it's a nuanced chart. Okay, so the impulse, the A is right here. Let's get this out again. The A is right here. This is B. C is here. Okay, so we measure from the 0 and we go from the A to the B. So the full distance, now we have market structure. Remember, we're measuring the market structure, 100% of the market structure. That's where we drag that tool. Now we have that. The pullback, the retracement, the basketball went up to, what is that? That is just above 38.2. So on the Fibonacci, this is the Fibonacci, just like in nature, folks. This is where you use the Fibonacci tool in trading. That retracement came back up again, and it reached the 38.2, which is the other side of 50% to 61.8. There's your pi, or phi, I should say. So that 61.8, it went to the mirror of 61.8. The yellow line, almost the yellow line. Well, it did. It basically went to that yellow line, and then now we're waiting to see what's going to happen. Because that's how much it is, what we do is that we extend out to the equivalent. So this 38.2, that 38.2. So now we literally got to move this. We're breaking it like hook or by crook. We're cutting things loose. We're letting it go. We got to go down to here. Wow. Which is 23 cents. Why? Do we have to? Oh, wait a minute. Sorry, folks. I already moved the green line. We don't have to move it already. I moved the green line from like, it was up Whoopsies. I moved the green line from when it was back up here. I already moved it down. This is where I would go. And the reason why is because this is what was a major, yeah, that's right. That's right. Look at that. Don't have to go all the way down to 1382. We need to get down to this because that's the market structure right there. So I'm going to do it on the weekly and reset the screen here because it's all weird. There we go. Look at that. Market structure right now is there. Market structure from, remember how we said, remember at the end of 2024, everybody got excited? This is market structure right now. This green line to the yellow line. Anything can happen in between these things, and technically, we're still consolidating. But in trading, we do have an A, B, C, D. We don't count this data. And the reason why was because this, we're talking about all of this. Look at all this consolidation. Look how much emotion we've gone through over the last year. And literally we've been consolidating the whole time. Truth of the matter is, this is where they were in 2020. Okay, so 2020 to here, that top way up here, that is a growth of 16,000%. That's 164x. Okay, so we don't count that as market structure. We just call that alt season. And folks, I can tell you right now, because of the way that this market structure is, and the timing of where we are in the oncoming of digital ID, I can tell you that this right here is actually the C to this A. Okay? This whole time we've been talking has been 42 minutes. And all I've been talking about, everything that I've been talking about has all occurred. Every piece that we've ever seen looking at this has only occurred. Like I didn't even start there. I started talking here. I only covered the last 259 days in what I talked about for the last 45 minutes. We've only been looking at charts from the last 249 days. This is fucking incredible. Think about it. You guys are having these emotions in this area here. It's okay. It's okay. This is C. We're doing okay. This is C. I'm going to make it big. What does that mean? It means this is A. So if that's A, now we got to try to figure out where's D, right? Because we got to get, there's A. A. B. We don't know where D is going, do we? We have no idea where D is going. But A to B was 16,000. This is the only time that you will ever see me use a Fibonacci tool to get an idea where the hell could D go. A, B, C, D. Now, I hope that everybody recognizes that this is not to scale, is it? You can see that the lines way up high, they are getting closer and closer together, right? And that's because I use a logarithmic chart, okay? I don't use regular charts. I use logarithmic charts. And what I'm going to do is I'm going to bring it back to regular, okay? So this is how everybody else looks at the charts because it's to scale. Everything that we've been looking at up to this point has not been to scale. I don't look at the charts to scale because of how fucking insane this alt season is going to be. Look at where B is. Now, this is to scale. I can't even zoom out. Like I zoom out all the way and I can't even see where D could be because these lines are they're all so far above. I have to literally squish the chart. Oops. D is projected to be up here. D. Wow. If this is B, D is going to be projected to be here. That's $5. Right now.
And that's Cardano?
This is Cardano. And right now, the price is 70 cents US, 98 cents Canadian. $5 US. What does that translate into? Today's dollars? No idea, because that is a gone chart now. Wow, I hope I didn't lose the whole thing. It's because a trading view doesn't, right. It doesn't save me. It doesn't let me go from US to Canadian and bring my dollar thing. So, but $5 US right now, what is that? $8 Canadian, probably, something like that. An 8x, okay? An 8x. To D. What does D? Remember we talked about D earlier? What does D mean? D means the trend is confirmed. Let's say it's the purple line because I do not believe that it will be smaller than that. Simply because the distance between B and C, remember, this is to scale. The distance to B to C, look at how far that basketball came down from the reverse gravity. Okay, just think of it that way. This is the basketball coming back down. Look at how close to A it got. It got super close to A. So what is this? This is what we call an energy buildup. When the ball goes up again, now this is reverse gravity, okay? But when you are at timeline that we're on right now and where we are in the war and the digital ID and current global currency reset and all that good stuff, there is a massive energy buildup where if it's reverse gravity, there's no more ceiling. So the energy buildup here over since, think about it, this here, that was 2021. This was November 2020. This, when I saw B, okay, keep in mind, I've been trading for since 2017, been trading. And the first 2 years that I traded, okay, well, first off, let's just put this out there because I feel ashamed about it. And I'm practicing being more authentic and real and vulnerable. In 2017, when I got started, I did the worst thing you could possibly do as a trader. And I took everything that I shouldn't say everything. I took half of what I had made, what life savings I had, which was pretty good amount, $23,000. And I put it into Forex, foreign exchange, okay? Not cryptos. 2017 cryptos, I saw what they were, but I wasn't going into that because I didn't know anything about it. And I did know someone who knew a lot about Forex, and I wanted to learn because he was making good bank. So I went ahead and learned. But in order to learn, I just put $23,000 in. That's your tuition, Paul. That's what that was, tuition. Because I made $30,000 with that $23,000. I made $33,000. I was at $30,000. I was at $53,000, and
Hey,
I
Paul?
didn't sell. Yes.
Paul, when you don't give up, it's tuition. If you give up,
Oh yeah. Well, if you give up, it's not tuition anymore. That's right. It's a lottery ticket. So when I saw what happened with the altcoins, when alt season hit after COVID, I was like, okay, I know where this is going. Because what I done after I lost that money, I went like this. Okay, I'm going to zoom in again. I'm going to zoom in. And I'm going to zoom into a 5-minute chart because I don't pay for TradingView. I can't believe TradingView is what they charge. But I want you to imagine for a second, like this is chaos. This is a 5-minute chart. We are zoomed in 5 minutes. We are looking at the market data that only spans across 16 hours. This is all the data of the last 16 hours of price action. Okay, there's a lot of ups and downs. There's tons of trends. There's ups and downs and reversals and switch points and pivot points, and there's triple bottoms, and you can have a hammerhead top, and like you've got to know your shit in here. When I saw the potential of what was there for me in trading, I was like, I'm gonna freaking learn trading. So what I did was that I spent 2 years, most of 2017, because I made and lost that money all in a period of 64 days. I went ahead and did what's called paper trading for 2 whole years, because I had it in my mind that I was going to learn how to master this so that I could help people make money off of these markets, because I knew it was all manipulation. So 2 years of paper trading this simply means there was no money attached. And for 2 years, 4 hours, 6 hours a day, I was pretending to win at the 5-minute chart, or at the 1-minute chart, sorry. What the strategy is called scalping. And you are literally in and out of the market in 15 minutes. It is the worst environment to trade in because it's the most difficult. And my philosophy was, if I could learn how to play piano in the environment that I grew up in, I can accomplish anything, because that's the worst environment you could possibly learn in. And the piano was junk. It wasn't even worth $1,000. I learned how to play on that for hours and hours and hours and hours and hours a day. And I got a full scholarship to Anderson, Indiana for piano performance major. So I could go play with orchestras. I figured if I learned trading, then I could come back again and win back that $50,000 that I lost. So that's what I did. I learned that. In 2019, I started out on my own. But what I did was that I was focusing on other data that would allow me to use those strategies in the trenches for 2 years. I want to use those strategies and trade longer time frames, because the chaos and the time you have to spend. Oh, so that's when I went and was looking at, let's just trade the daily chart. Let's go back to this again. Let's just trade the daily chart. And I know that if I can just practice the daily chart like this, I can make some pretty good money as time goes on. The daily chart right now is still consolidating, and it's been consolidating since June of 2023. Consolidating. The energy buildup that occurred here was massive because the only people that were buying here were the people that had the vision, that knew what their plan was, what products and services that they were going to provide. These are the next generation of merchants. They're the ones who are building the tools that are going online over the next 2 years. Data is literally exchanging your fiat currencies as the world reserve currency. And it's not wrong. I mean, again, I would much rather have a machine do all of the work in front of this screen. I'm a glorified button pusher, and I'm sick and tired of it. Where's D? Wherever D is going to be the next alt season. But what happens after a D? It becomes a B is what happens. It becomes a B. And then A becomes C. Whoa. That becomes C. Where A becomes there, B. Oh yeah, so whatever low we create here. So let's say, for instance, we just did it. Just out of, there's no confirmation on this. So this is all hypothetical. We're still consolidating, so we don't make decisions. There we go. Now we can see it a little bit better. D is just the next phase. Okay? This is going to be a 2-year thing. D is not going to take 2 years. Okay? D is probably going to take D is probably going to take 42 days because that's what alt seasons are like. So D, when that happens, wherever that happens, whether it's here or even as low as it, remember, this is market structure. Green is market structure. Where does that take us? D, oh, sorry. I got to go back to the total because that's where I was marking that stuff. We got back to ADA there for a second. This is where I want to be so that we can see where we're headed. Because then this gives us a better idea of what Cardano will be. Because Cardano, who knows? It's an altcoin. We need to look at the chart of all the cryptos to be able to determine where we're headed. So weekly chart right here.
Is that Bitcoin and Ethereum or just the others other than?
This is all of them. Every one, last one. $3.8 trillion right now. I haven't even gotten to the news. So right now, we've just seen some market accumulation, right? Market accumulation is here. Why? Because market structure for the last AB is like this, right? There's AB. Here's C, and then they made a D, and they pushed a little bit further with another one, because that here is the confirmation of a trend. We have the low, high, low, high. There's your A, B, C, D. C came down, and it made another D. So now we're confirmed in a trend. Again, yeah, this is where things get fun.
Paul, what is that called when you step up like that? Like you can see it's the consolidation is like right here in the middle.
Yep.
Like right here, and then it steps up.
Yep. That's called an extension.
Extension. Okay.
Yep. So we made an extension. That D formed that extension. And so now we have that confirmation of a trend. So the next movement up, the next little bit that we're going to notice, this is the weekly chart. Okay. So we were very much zoomed out here. Weekly chart. Where's the next extension? 5.5 trillion. From 3.8 trillion. That's an increase of 1,700. No, sorry, that's the pips. 45%. So a 45% increase in the next big punch. In order to determine what ADA is going to do, we need to take into consideration a couple of things. Number one, market capitalization. ADA market cap. When ADA had the last big alt season, there was a 2,500% increase. When we look at technical analysis, we don't use the alt season as the basis because market structure is now here. Because this here is just insanity, right? That's like a banker's candle. We don't regard that as a trend setting thing. Market structure is from the high down to this C. So we're in consolidation still. The projection for the market capitalization on ADA, if we go to a 45, not a 45%, we got to go back for a second.
Got to get to the news, Paul, because I'm going to have to go soon.
The news is not even that important. I just get upset about it because the reason why it all happened, Trump opened his mouth and threatened to do tariffs. That's literally what happened. The reason why all of that happened on Friday was because Trump opened his mouth on the reality TV show everybody's watching and went like this, and everybody did a bank run across the board. Guess where they didn't? In fact, after gold hit 4,000 over the weekend, like on Friday, gold hit 4,000. And I was like, wait, what? Oh, well, we're going to have some resistance. This is a psychological level, I said to myself. No, it went up another 3% with another high, 41.85 the next day. Yesterday. Monday. Stock market. Stock markets dropped. When he said that, stock markets dropped 3%. Folks, that's halfway to when they have to shut down Wall Street. Halfway to shutting down Wall Street. It's estimated $3 trillion were liquidated. $3 trillion out of the economy. Gone. Where did it go? Where did it go? Money's never lost, folks. In markets, money's never lost. It simply goes from one form into another. That's all it does. It just goes from one form to another. Well, we've been watching This happened quite a bit, actually. I'm a pretty good pattern recognitionist, if that's a word. Been seeing this happen quite a bit. In fact, if you go back, and you can go back in time, this chart here only takes us back to 2019. If I go to weekly, how far does it go back then? 2010. 2010. That's after 2008. Can't even look at that data. But I've been watching things since 2008. And I've noticed the patterns. And I've been learning the language of this chart ever since. And I've applied what I've learned to all the other charts that I look at. Just pattern recognition, that's all it is. Okay, now we're zooming in. Ooh, let's go to COVID. This drop here, we recovered, not a problem. But ever since then, we've been trending. Higher highs, higher lows, higher highs, higher lows. But what is that? What is this area here? Again, we got to zoom out. Look at what's happening from a very, very macro perspective at this conjuncture of history. What we're seeing here is representation of the United States economy, of the top 30 companies in America. The Dow Jones. All of this here represents the last 819 weeks, okay? So that's 15 years. 15 years of tech. COVID was when the governments said, everybody go online, shelter in place. The amount of digital IDs that were created during this time were absolutely astronomical. And ever since, remember ABCD? This is B. And this is C. Oh, didn't change. Oh, there we go. That's C right now. Oh, sorry. Nope, I did that wrong. That's A. There's B. There's C right now. Why? Because, nope, sorry. I got to remember. We're actually doing a projection here on D. Market structure right now, since COVID. Is that right? Yes. Let's go from COVID. Market structure right now since COVID has been, that's 100, extension A, B, C, D, C, D. We now have confirmation. No, the end of this week. So by the end of this week, we will have confirmation on whether or not this is the next bounce up. End of this week will tell us whether we're creating new highs or not. If we're not creating new highs, market structure right now is, where did I put C? There it is. C. Market structure is C. What does that mean? What we saw yesterday was a 3% drop, half of what it takes to shut down the market. What do we know about charts like this? Look, it's a trend. It's a trend. Yay. That's what they said. I'm zooming in now. Remember, last chart was weekly chart. I'm zooming in now. They said right here, look, it's a trend. It's a trend. No, we're still consolidating. Boom. They're looking at the markets. The masses right now are looking at the markets with the same mentality as the 4-hour traders were at this time frame across 3 months of data. the emotionality in the market right now is parallel because they're saying, look, excuse me, should have muted for that one. Because they're saying, look, this is D. Yeah, that could very well be D, but we don't know until the end of the week. Because that's what it takes. We have to have 2 bars confirmation that this is not a high. This might not be a high. Yesterday, Friday rather, that's just a blip. When we look at what this is, what is this? This is April 2025, up 28%. What? 28%? Typically speaking, the US 30 only goes up at about what? 8 to 10, 12% per year. Well, how in the world did it go in 6 months? 28%. Because this is not real. This is manipulation. Market structure could bring us back down, not to here. This is great. But we could very well look at market structure. This is the low. That's after COVID. Since COVID, markets are up 153%. 27% of that was in the last little while. This is not real. This is D. This doesn't happen. This kind of a bounce across this kind of time, that doesn't happen. This is market structure. A. This is D. And what we have here, and I will show you this, the same thing happened with Ethereum. This is the longest one I've done, but this is so important. We don't have a D yet. Why do I say that? Because we don't bounce from something like this and come back that fast. A, B, C. Technically, no, actually, technically this is C. Right, that's C. We did not form a D. Sorry, we formed the D. This here is just doing what they did to Ethereum. Ethereum had an all-time high way back here, back in 2021, alt season. Boom, all-time high. Thank you very much, Ethereum, for letting us know we have an all-time high. What happened when the all-time high got beat? Just, what is this? August 18th. August 18th, the all-time high got beat out. But what happened? It just oaked its way over top of the previous high. This is the previous high. This doesn't count. Why? Because we didn't stay there. We got a confirmation right here, 2 bars to the right. We got a confirmation that we're not continuing this trend. So that is not a new high yet. Not a new trend. We started coming down, and sure enough, Ethereum came in here, and what did we say? How much money was taken out? 19% of the market. 90% of the people in the markets lost 19%. What's 19%? Almost 3 times what it takes to shut down fucking Wall Street. I have made a very important case for what's going on in the market right now. And my desire right now is to use the rest of our time, whatever that might be. It's going to be, I expect it to be a while. I want questions from all of you. How has this landed? Do you guys see what's happening now? Have I made things clear, the scope of what's going on?
With the chart that you were originally showing, it just feels like we're still in a very long-term consolidation phase. like consolidating since 2020,
Yep.
and that all these blips and whatnot, these highs and these lows are just a distraction from the bigger
Totally.
picture.
Totally.
More than distractions, wouldn't you say manipulations?
Of course, for sure. I mean, look at
But they're
again, look back
creating
to
distraction. Yeah.
yeah, like remember when we talked about this, Maureen?
Mm-hmm. Yeah.
Yeah. I still have this saved. You know, when we were talking about that, this is when the crash happened, and I was saying, folks, you might want to position yourself for this because this is market structure. This little drop where everybody lost their shirts and they freak out. This is market structure down here. What are you freaking out about? Oh yeah, no, that's right. You over leveraged and you lost. What did we say? $800 billion. $800 billion. And that was within market structure. Because everybody thought Ethereum made a new high. There's the trend. So of course the same thing just happened with the US 30 over the last little while. Why? Because this is the more macro market. Crypto, that's your micro markets. The micro markets are where the money's going right now because everything in the world where attention is the only currency the elite want from you, everything you do is a micro transaction. So we're going from a macroeconomic model to a microeconomic model. Now, because you got me fired up, I remembered we didn't talk about D. Am I going too long? Are you interested in knowing where D goes? That's what I'm asking.
Yep.
Yep. Okay. That means I can't go to a regular chart. I have to go logarithmic because I can't read for me to do that, I'd have to go like this. Squish it down, keep squishing it. Why? Because look at that. That's my last B. That's my B. I got to keep squishing it so that I can get an idea because the energy buildup is here, right? The energy buildup is here. This is where all the money is. This is where all the smart money is. And they, in this little tiny little bit here, they took $800 billion from all of the insane people that thought they were in an upward trend, that they thought that they were bull. So if that's B, the chart, I'd have to squish this down to find D. So I go logarithmic. Logarithmic. Thank you. Reset. Perfect. Now I can zoom out to the weekly chart and we can properly plot our course. Folks, I'm using the same math that I did last year after these lows here, okay? I haven't changed my strategy since here. Why? Because this is my macro move. I'm just taking money from all the people who are fearful and greedy in the microtransaction universe. I've gone macro. I'm 4D from their 3D world, okay? Early adoption is all in here. This is where this is 100. That takes us D, right, to $5. That's where I was going. What is D? D becomes the new B, confirmed of a trend. So now B is at $5. Now we come down to C, market structure, current market structure. Where does that take us? Now, even on the logarithmic chart, oh no, there it is. The next D, so this is now going into like end of 2026, heading into 2027, $8. And that has been my target since 2023. That's when I decided where I was going to start selling, because that's where the trend's headed. If this is C, this is market structure, we don't count this because that's the banker's candle. We can't count it. We have to consider this as A. And when you combine that with where we are right now, we're literally, whenever there's a market collapse, the most money is made by the people who go into what are called emerging markets, because those are the markets that actually get their wealth to grow over the 5, 10, 20 years, because they're an emerging market. Okay. We are in an emerging market. The world reserve currency is literally going to be fought over a meme coin. Because that's all these countries are doing, is that they're just starting up fucking meme coins. So this is in my mind A, because this bit here, that's nothing. The market could very well still crash. And remember, I'm on a logarithmic chart. This would be a 68% drop. Market structure would tolerate a 68% drop right now. Because this is our mark. When we look at what's going on, this is where I think the rug will start to be pulled again, similar to how it got pulled when ADA was at $3 or when Ethereum was at its last big peak, right? Market structure is way down here. Market structure on Ethereum. If yesterday it was $800 billion, this is 77%. How much of a drop was that? That was 18%, wasn't it? Because I was like, yeah, they would have shut down. Yeah, so it was a 24% drop last week. So 24% drop in total last week. That could have been 79% drop. Market structure would have tolerated that. I don't think that's a very unlikely scenario in this point, simply because of this here. This is a strong C from the pulse from A to B. This A to B here is pretty nice. But, we zoom back out. This is the last alt season. We don't count that. That's A, B, C, and this D doesn't count because we did not beat out the last high back from 2021. That is, I think I've really overviewed that. Back to questions.
I don't know if I have a question, but my sense is that all of this volatility and action is just in response, like to Trump doing the tariff thing. It's like superficial. Yeah. It's like the swaying in the wind.
Exactly. Or even a flutter of a leaf, even to a smaller degree. Why? Because that little drop was $800 billion. Just the leverage alone on that. That was almost $1 trillion that came out of cryptocurrencies. It was $3 trillion that was liquidated out of the US market. And look at that little tiny blip, $3 trillion, that's all it did. We have no concept of the fraud. If that was $3 trillion, look at the difference in size. If that was $3 trillion to drop 3%, how much leverage is in something 150% larger? That's 300 to 1. That's 300 to 1. The markets have been leveraged 300 to 1 since COVID. They don't do that unless they're going to make a lot of money. And it's because all of this is being liquidated. And remember what I said? The markets are just shifting from one form to another. Money's not lost. That's where I was going with this. Money's not lost. It just transfers from one form to the other. Where is it going? Digital assets. The microtransactions are going to be attached to stable coins. That's the next big thing. The governments are going to come out with stable coins. It's a wonderful word because it's stable to their mouse clicks that they create and put a dollar sign in front of it and put it in your bank.
So it's like energy. Energy can't be destroyed. It just changes forms.
It just changes form, and the attention is changing form. Look at now how much AI content is just absolutely flooded the social media feeds these days. You can't go anywhere. You can't open up social media now and not see at least one piece of AI content. Attention has now been digitized. Attention, the currency, the only currency that keeps the elite going. We're supposed to be playing music. We're supposed to be creating sanctuaries like Audrey. We're supposed to be experimenting like Audrey Lynn. Maureen, you're supposed to nurture that land that you live on and build community around it and show people how to bring those principles to their houses.
Well, we're just starting actually today. We're doing sacred ceremony. So
Tell me more.
Well, we're beginning just in our meeting, and we do reawaken. So that's starting with the neighbor. Ron and I have always done that. We start the day in sacred ceremony, and with the tuning forks, just creating a sacredness around it. And it's not to transmute, it's to add to, and it's not to replace what's happening. It's to create a boundary of space. Let me put that, a boundary of space where we still have a sense of who we are, but the content is being contextualized with that frequency tone. So so we're starting that today, and my nights are the demon cave, and then the daytime I like to see Paul Unleashed. Like Paul Unleashed. This is Paul Unleashed today. Yeah. I'm thinking of Kramer. I used to watch him so many years ago, and he's like a wild man. And some of that wild. One of the things that Ron and I discussed this morning was how do we put a spine through the spine, and yet leave the wildness there. The wildness is there with this little bitty structure moving through it. And that's a huge symbol to me, as the wildness and the structure carries gratitude and honoring for both ways, and also the demon cave, the demon cave where we guard the demons with our sense of whatever that is, but it's like each one of us can open our mouth and have the demon cave present. Or some other orifice. You can pick the orifice you want. Thank you, Paul, for this. I got to leave because she's coming soon.
Yeah, you're welcome. Audrey, thank you so much for staying. I know you said you needed to go. How are things? Do you have any questions? Oh, you're on a phone. Okay, all right, awesome.
No, actually, when I was on my phone, it was the person that I was going to meet.
Oh, okay. Got it.
So you met amid the boundaries of
amongst the chaos of Paul.
Well, chaos or wildness? What do you want? What
I'm feral.
Passion. Not chaos.
The title of my book, The Feral Child Within.
Yeah.
Beckoning the feral child within.
Yeah.
I don't find
Audrey Lynn is the experimenter. I love that brand.
She's the pioneer woman.
Yeah, and I'm the explorer.
Okay, buccaneer.
And sometimes I'm like kite, and Audrey Lynn is the string.
How about the buccaneer on this side, and then on the back side is the pirate? Anyway, it's good talking with all of you. I love meeting with you, and I feel like I get to travel to Canada when I meet with you guys.
Yeah, I bet.
Thank you for bringing that earth frequency. I appreciate it.
You're welcome. Have a good day, everyone.
And now I just know how to get out of here. I always have a difficulty.